Sunday, September 30th, 2012. In last week's commentary, I think I was definitely more bullish than bearish, and I was of the opinion that because the market did not give back much of the movement at all, much of the up movement from the Fed and the ECB coming up into the top of the trend line, I thought that the market would make one more move higher before going lower. Obviously, that turned out to be the wrong assessment as we moved down, a little bit lower this week. Now what I think the market is doing is it's in a process here of trying to move to this lower channel. And in doing so, it's kind of slowly grinding there. And I want to get a little bit into the profile and kind of analyze what the short-term versus longer-term traders are doing here. But it does appear to me that the bounces here thus far, such as in Thursday here, and we had a little bounce Friday that was an intraday that I'll show you in a second, seem to be more of the short covering variety. And it seems like the market wants to grind its way down to this area. So for this week, my target is around the 1420, which is these prior highs here, and probably even to about the 1412 or 1413 as that ascending trend line keeps moving up to move price. You don't see it here because it's a little bit obscured, but if you trace back to here, you can see this red line here is the 50-period moving average, which we have not visited in some time. So that also ties in perfectly with the shorter term trend line. All right. Markets keep coming down on the ES and testing an area around 1433. And I'm going to show you a chart here on Z2. So look at a 15-minute here, right? And you see these supports right in here, right in this area, and you have kind of a fake out move down below. Some short covering comes in, brings the market back up, right? So if we look at the profile here, what I want to show you is going back from, let me see if I can get this on here. There we go. Let's go back to the first sell-off here, which is on September 25th, right? So when the market came down, it was somewhat elongated. We had an extension of the profile to the downside, which is definitely a sort of a shift in perception from the balanced area that was up here. This is where the market is more in balance, where you have, this was the longer consolidation going back some days here. And you can see that the value is consistently overlapping, where 70% of the futures volume went off each day. You have it here, and then it overlaps to lower, then it's a little bit higher, but not very far away. Here, lower, and then finally you get this move down, right? But this move down here is relatively thin. You don't see a lot of fatness in the profile here. It's relatively thin. It would be more bearish if it was somewhat fatter. So that's why my idea for target here is not really that far away. I'm thinking that we just correct to the prior highs and we correct to the trend line. I'm not making an assessment here as to whether or not the market goes higher from there. I'm just kind of calling it like I see it as far as the profile. After we had the move down here, we definitely had some balancing here where there were some laggard shorts coming into the market late, possibly some new longs seeing some value here. And we know that to be true because there was definitely laggard shorts kind of getting the market overly short here, because you had the next day, which was the 27th, you had a spate of short covering where the market just kind of spurted higher. And what's interesting about it is that when the market came higher, and here's where the takeaway comes from, where you want to kind of use this as an ongoing narrative for later, right? This is for those of you that look at the markets in a longer term time frame than just intraday trading. That's why I split the blog kind of in two sections, where I'll tell what I think is going on in the bigger picture and what for intraday trading. But here's where pieces of the profile start to come in handy for longer term trade, right? When the market sold off here, came out of balance, had some excess to the downside. Notice where the short covering bounce ended. This is important. Notice that your bounce ended well below the balanced area. You were not able to get there, right? And then you created a very prominent point of control where a lot of volume went off here at the 1441. And on Friday, look where your bounce went to. You had short covering on Friday as well, right? And I'll show you, we'll go back to the intraday chart in a moment. But notice here, the bounce didn't make it to the prominent POC. So it's kind of like writing down in your narrative not only what did happen, but what didn't happen. What didn't happen is important. So my point here is that if the market was stronger, I think you would have seen possibly slightly higher action here, maybe an excess, even an excess high up into the range, but we stopped well below range, pretty much, dead on at these lows here. And then on Friday, whatever action the bulls could muster was not able to take it here to the prior day's point of control, which was very prominent. The wider that the POC is, this is where most of the greatest amount of futures volume went off in the prior day. The wider that it is, the greater odds you have of testing it. So when something that should happen doesn't happen, I write that down in my notebook and I carry it forward. So it tells me that I think the market is probably going to be weaker over the next couple of days. And the catalyst for bringing it lower is going to have to be the takeout, really, of this area here, where you have Friday's lows, you have Thursday's lows, you have very prominent area here, right, with a lot of volume. It's really all happening in this same area I've been talking about, at the 14, say 30 to 33 area. All right. If I show you the here, I'll leave it on the 15-minute chart here. Again, notice that these types of spurts that sort of come out of nowhere, this is indicative of short covering, because you have the shorter term players getting the market overly short, spike, and then, as I was saying here, remember this was the action that couldn't get it up to the POC, and then sideways action, breakdown, again spike, people getting overly short. But why? Because they're coming to the same area every time. All right. Now in the week to come, remember this as well, as far as carrying the information forward, is that every time the market comes down and tests that same level, it weakens it going forward. Okay, especially when it has action like this, where it bounces but not high enough, keeps coming back to the same area. Each time of a test of that reference weakens it and greatly increases the odds that it would move lower. So that's why my target here for the next week is going to be, like I said, I can leave it on ES, right? You can see here's the lows that we've been talking about. ES would come just under 1400, pretty much right to it, which we know is a magic number. Ties in very well with a lot of balance in this area. And as far as the cash is concerned, I think add like 7, right? Cash is trading for about 7 more than futures right now, because we're early in the cycle, right? As we know that as the 3 months goes on of each futures period, those values converge. But for now, we're trading about $7 ahead. So, okay, let's go back to the S&P daily chart for a second. One last thing that I do want to mention about this market is that if we do come down to the 1420 or test the trend line area around the 1415 here, then our next step is to immediately draw a downtrend line right away. Always want to do that right away, because there could be a different channel forming now to the downside. And then what will happen is, if we are to bounce at that level, the initial target will not be the backside of the trend line here, but will be the top of the downtrend line, to see if we can get over. So for now, it seems like this tightening is happening, and we shall see where it takes us. All right, let's take a quick look at other markets. First one that I'm watching a lot is Apple here. Notice on the daily, I'm curious as to whether this is a head and shoulders pattern forming or not. What I'm curious about is if this here is going to be a left shoulder, and if this is going to be a head, and is this going to be a right shoulder, which is a pretty classic reversal pattern to the downside. If so, then we have to expect that this 50 MA is going to be breached at least by a little, and I would think probably to these prior highs. Notice how strong this support is here. How many times you bumped your head there. We made a little bit over it, but for the majority of this time, we have problems right here. A lot of congestion. So there's really, and this is not going to support much, so I would think that Apple comes right down into this area to the 625, and if it does so, then that obviously would tie in with what I was saying, that the SPX could be weaker in the next, over the next week coming down, right? Let's take a look at bonds. Bond market is interesting here, the 30-year. Think of this as kind of inverse to the stock market. If we are weak in equities, then the money flows into bonds, and vice versa. There may be a signal here in the week to come. If we breach this area, I think that could be relatively bearish for stocks, could indicate that the money flow is really going here rather than to equities. But for now, the down channel is in place, so if we bounce off here and move hard aggressively to the downside, I would expect that we'd see probably strength in stocks. All right, let's talk about gold, silver, and natural gas. GC, I'm going to switch this over to a weekly. bottoming tail hammer on the weekly, so there is sign of reversal bar here. Makes somewhat of a more defined entry, but as I've been saying, I think the risk reward is kind of skewed here, more towards risk than reward. I think it's difficult because gold could easily back off a bunch, given that it's run so far. So obviously approach with caution. If you look on the weekly SI, silver is also off of the reversal in the middle of the week, made a nice hammer there, so something to think about. But remember, overall, you want to see these bottoms, this action happen at the end of a move rather than at the beginning of a move. So you want to see like tail like this, tail like this. These are horrible circles I'm drawing. You know, tails here. Look at these two tails. You know, the optimum scenario would obviously be more sideways and yet another reversal bar on the weeklies, but I don't know that we get that. All right. Wrapping it up, last but not least, here with a market that we never really looked much at, but the reason I'm going to mention it here is because I think there's a trade. Natural gas is really strong here, has been holding its ascending trend line since the April lows really well. I think it has definitely room to run. You'll note that really there's channel like here. And again, these are just horrible drawings, right? We've got room up to the top of the channel, at least to like almost $4 in nat gas. I am starting to sell some naked puts in UNG, which is really easy to do. Just pick a spot underneath where there's some support. Like for instance, in this UNG, I'll look at the daily, right? Probably right back in here. So that's something to look for as well. I'm also selling some naked puts in GLD, which is not the same thing as being directional. I mean, it's not as much bang for the buck. And I'm selling some naked puts in SLV because I do think that I think the odds are much stronger of just consolidation and higher, or maybe even just higher without consolidation, rather than lower in any of these commodities, in the gold, natural gas, and in the silver. All right. So that's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.